Hello, everybody. Simon Dixon here, and welcome to episode 73 of Bank to the Future Live. Today, we're doing an interview episode with the founder of a pitch that's just gone live on Bank to the Future. It went out to the Priority Access Deal members, those that have membership and have a minimum of 10,000 Bank to the Future tokens on their account, have received it. And already, I think we're approximately $800,000 of the way through. And so we are happy to get Vincent on, who is actually the founder of First Digital Trust. And I'm going to give a brief intro from our perspective of how this deal actually came to be. And then we'll find out from Vincent a little bit more about the company and some of their plans. Just before we actually start that off, a couple of announcements, a bit of housekeeping. Today, we released a small upgrade to the platform. You can now not just invest, normally you invest directly in pitches with Ethereum and Bitcoin, but if you're a non-US investor, you can actually save money on fees by just depositing ETH and Bitcoin direct to the platform. You can leave them on the platform, and then you can choose which company you want to invest in as and when you choose. It obviously just takes the live exchange rate. People are raising in dollars, but it takes the live exchange rate at point of investment. We also launched support, which is relevant to this pitch and this call today, for TUSD on the platform. TrueUSD is, I think right now, I'd need to check my market cap stats, but I think it's either third and fourth in terms of the size of stablecoins at the moment. We obviously still support Tether, and we got more stablecoins that will be integrating as more and more people and those market caps keep increasing. So you can now deposit those to the platform and check that out. But we just sent out a message as well for the First Digital pitch. So to give some background on the First Digital pitch, one of the biggest problems when you're involved, so Bank to the Future is a securities business. We've always been a securities business. We're the first securities business in the crypto and fintech space. And banking has always been a problem. So you always end up in a scenario where you find a banking partner, you find a payments partner, you find a custodian, you find an escrow partner, so that you can safely store client funds while they're actually looking to invest or while they're in the transition period between their shares being issued. And over the years, we've had many different partners and many different banking partners. But as the industry grows, you tend to encounter certain problems, certain challenges when those banks or those financial institutions or those escrows or those custodians are not set up specifically to work with the digital asset cryptocurrency space. And so we've chewed through many over the years. And when we started to go to the next phase of our growth, we've been talking about our retirement plan B products. We're looking for a real stable partner whereby they're really on board with the vision, the mission. They understand some of our concerns about traditional banks, traditional financial institutions, and they're also purpose-built and set up to actually work with digital assets and cryptocurrencies and really just have a philosophical alignment. And so we were out there looking for partners, and First Digital Trust was actually recommended to us by Adam Vaziri, a member of the Bank to the Future team and on the board. Then that's when we started really discussing the possibilities. It was at this stage when we discovered how philosophically aligned the First Digital Trust team are. And eventually, after working on a few test tasks and test integrations, we decided to actually work and integrate with the First Digital Trust team so that we can offer additional trust structures and protections for our client assets. And also it turned out that they're also going to be doing a funding round. So they gave an allocation for our platform investors. And we're going to be digging deep into that because it really is an onboarding technology-driven company that is actually going to be bridging the difference between these crypto assets and traditional fiat currencies, and also understanding some of the challenges in banking in today's environment. So that's our little intro of how we got here. Also, one of the other companies that work with First Digital, use First Digital, and Vincent can tell a bit more if it's not exactly as it is, but is the TUSD stablecoin. And that's a stablecoin, an alternative to Tether, that has a different regulatory structure, different risk profile, and different model. But you can actually, the minting of TUSD is something that we can do with First Digital Trust. So that's something that we've been doing. And when we switch to our funds being backed by not just stablecoins and fiat, but well, not just fiat, but stablecoins as well. So we're really excited about this because this is the first stage of integration. We're actually not fully integrated with the API. That's actually in development right now. And so once we get that fully API integration live, things will be a lot faster and a lot smoother as well. But we're iterating, and then we can work more on the retirement plan me products. So just for full disclosures, there is a slight conflict of interest there that we need to disclose, in that we are actually a customer of First Digital Trust, as well as First Digital Trust being a customer of us in their funding round. So I think that's a good place to start with you, Vincent. Why don't you tell us a little bit about how First Digital Trust came about, your background, and how you got here?
Hi, thank you, Simon. That was a really kind introduction, and really happy to be on the Bank to the Future platform. So again, my name is Vincent Chalk. I am the CEO of First Digital Trust. We are a spin-off from First Legacy Trust Company Limited, which is a traditional trust company based out of Hong Kong. It is a public trust that is licensed under TCSP for AML purposes. And Legacy traditionally handles regular trust products, retirement plans, pension plans. We can hold stocks, bonds, real estates, and we've been dealing with a lot of traditional pension plans throughout the years from our inception in 1992. So I took over Legacy Trust about 11 years ago and saw the need about 4 years ago for the blockchain space when a lot of ICO companies came to us looking for some custody solutions. And so we thought, okay, well, let's look into this. I didn't know anything about blockchain. I didn't know what crypto was. Bitcoin at that time is relatively new. So we thought, hey, maybe there's something here that we can look at, see how we can help the industry develop using a trust structure, a custody structure. And so we began, custodying some of the ICO clients, and thought that there's a huge need to supply this industry, which is growing. And so we started looking at custodying crypto, which was a whole new challenge in itself. How do you hold crypto by being a traditional trust company? So we had to work with, first, how do you hold crypto in a wallet, and how do you keep that safe? So as a custodian, our fiduciary responsibility is to make sure that all assets are 100% protected. And this is where we, had the good grace of working with Ledger when they started developing the institutional wallet, and we became their partners, and they guided us through all of the ways of protecting cryptocurrency within our trust structure. So we moved, we began to look a little bit further, and we developed into helping companies structure ICOs because, there's KYC, there's anti-money laundering, to look at, there's taxations, and this is something that we've been very familiar with, dealing with traditional assets. Coming from the pension world, we deal with pensioners globally. So as a Hong Kong trust company, a lot of our pension was based on the occupational retirement scheme in the past. That was an exempt scheme that was focused more on non-residents of Hong Kong. So we started developing trust structures that cater to these non-residents of Hong Kong, which helped us look at, first of all, we had to look at where they were domiciled, if there was any double tax agreements between the two countries. We had to look at their marital status. I mean, there's a saying about two things that are destined, and death and taxes, right? We heard of that. So you use those two things, which is a real reality, and you have to add in divorce, and now we have to add in data breaches. So those were quite a lot of challenges and how we were supposed to look at helping our clients, because there was a lot of demands in looking at, first of all, how can we give proper advice if we don't know where they're domiciled and what kind of tax jurisdiction they're from. So there was a lot of work there. Now moving into the whole digital asset space and crypto space, and developing tax structures and structures where they're not having to breach security laws, like you have to worry about collective investment schemes, pooling arrangements, all of those nice things that regulators look for. How do we develop something where we can help that space but not compromising our traditional business? And this is where the spin-off had to occur between Legacy Trust and First Digital. We had to move all of our digital assets because of the fact that, first of all, there's a lot of regulators haven't decided how they want to treat cryptocurrency. Fortunately, in Hong Kong, under our trustee ordinance, cryptocurrency is considered a virtual property. There's still many regulators in Hong Kong, and we don't fall under the SFC, Securities Futures Commission. We're not under HKMA, but we are under the Financial Secretary and the company registries, which is for our TCSP license. So Hong Kong is a very unique jurisdiction where we can really focus on what we do is custodying real assets. And in Hong Kong, Custom and Excise have already deemed cryptocurrency as a certain type of asset class, which is a virtual currency, can't say currency, but a property.
Excellent. Okay, so thanks for that intro. Let's rewind a little bit for our viewers. Firstly, let's make sure everyone's familiar with these terms. The finance world is full of jargon. So what is a trust structure, and why is that important?
Well, a trust is essentially very simple. A trust is a relationship. There's actually no legal structure when it comes to trust. Trust comes from the old days where, people went to war and they had to leave their assets to someone to be held in case, and most likely they never came back. So that's where the creation of a trust came from, and it's that they put it on paper. So it's a legal relationship between two parties and holding an asset, protecting one's asset. So that's what a trust is. And a custody is a product of a trust. So as a custodian of an asset, trusts have certain rules, certain benefits. For example, there are certain privacies within the trust. It depends how you structure it. So there's sometimes you can, when people hears the word trust, they think about banks, they think about unit trusts, they think about financial products. But essentially, trust is a relationship, which can be structured in many ways. So a pension is held under a trust. Custody is held under a trust type of relationship. So custody is whereby the client still has control of the assets. When some trusts where the clients don't have control of the asset, they relinquish the control to the trustee. So you look at the different types of trusts. You can have, for us in Hong Kong, we have vested and non-vested trusts. Meaning vested means that as the beneficiary of the asset, you still control the asset, but the legal ownership of the asset is the trustee. And non-vested trust, the legal ownership is the trustee plus the asset doesn't belong to you until you take it back. And those are the basis of how we structure some of our products, which is very complex, and it's a very legalistic, which we probably won't have time to go through that now.
Okay, cool. So we've got trust and custody, and you've given us a bit of a description of what it was like when you transitioned from custodying traditional assets like stocks, bonds, and real estate, and then having to move over to this world where really the industry was built around self-custody. So if cryptocurrency gives people the ability to own their own assets, where does a custody solution and a trust structure actually fit into that, and why would people want to do that?
Well, again, it really depends on where your residency is. So when it comes to trading cryptocurrency, if you're an American or you live in a tax jurisdiction that taxes your worldwide income, any trades related to crypto is still subject to taxation. So when you allow and you put your cryptocurrency into a trust structure, we become the principal trader. And in Hong Kong, the trades, offshore income in Hong Kong is non-taxable. So as a Hong Kong entity and trustee that acts as the principal for your trades, the tax jurisdiction is here, not in the domicile of where the beneficiary is. So those are some of the ways that we look at helping our clients, not by evading taxes, but they can defer it. So in some ways, when you defer tax today, is tax saved today. But eventually, if you decide to liquidate your and cash out and take your assets out of the trust, then it becomes taxable in the jurisdiction that you live in, if it's applicable, like the US or Canada. But if there's a double tax agreement between Hong Kong and that particular country, then of course those taxes are taxed here in Hong Kong, depending on the double tax agreement. So it's very complex. Again, we can't give these type of tax advices to everyone in the world, but we really look at the individual. We look at their situation. So it's a very personal, customized things that we deal with here in First Digital.
Yeah, but essentially the essence of this is how the rich, manage their affairs, and very topical at the moment is obviously the Trump investigations at the moment, where this is a topical issue at the moment, and then also more topical on that is the whole relationship between China and America and Hong Kong, how that fits in as well. So why don't you give a bit of a background on what your thoughts are with some people that might be a bit skeptical about Hong Kong as a jurisdiction right now? You've already told us some of the benefits of why that works and why this structure is used by so many. But has anything changed with the political side between China, US, and Hong Kong recently?
Well, I mean, I tend not to really involve in politics, but unfortunately, these are the questions that we get asked a lot. I mean, the spirit of what the crypto and blockchain is that you can become decentralized and basically cut out all government interference into your financial world. So we've always said in First Digital that cryptocurrency is borderless, but it's controlled by borders, and that is the reality of it. We love the fact that it can be decentralized, but there's always going to be some centralized part in this industry. So when it comes to the political outlook of where Hong Kong and China and the US stand, for us, if we custody crypto, well, technically, crypto is not held in Hong Kong. Hong Kong is a very good jurisdiction when it comes to trust laws. Our advantages as First Digital compared to a lot of other custodians in the US or other places is that we are still a open capital. We don't have capital control here. So First Digital has the ability to hold over 22 currencies directly without having to convert under our accounts. So that's a huge, huge advantage when it comes to dealing with multi-currency stablecoin clients, as well as dealing with, yield. So during this pandemic, we see people struggling because of the difficulties in actually making a profit to cover costs to actually run the company and to survive. So these exchange rates fees makes a huge difference, and that's what we can provide is these types of benefits. And when it comes to Hong Kong and how people look at the whole China-US, I don't know, spat, we think that this, of course, I'm trying to be politically right here, but I don't think that we will get affected. We've seen during this whole trade war and pandemic, First Digital and Legacy Trust has grown. Our asset base has grown. Is because we see the needs of our clients looking for those little solutions that give them the little advantages to actually outdo their competition, or just even survive without competition. So what I can see is that assets are not really held in Hong Kong if a lot of clients are concerned. We do have financial accounts with different brokers. We have relationship with Morgan Stanley. We have relationship with the largest brokers in the world where we can hold assets offshore. And of course, those are our clients' instructions. If they don't feel comfortable holding things in Hong Kong, we have accounts globally to hold assets, not only in crypto, but we hold physical gold anywhere in the world with our partnerships with the likes of Brinks, Melka Amit. We hold fiat, we hold in Singapore, we can hold in Europe, we can hold in our accounts in Africa. So when it comes to actually assets being held in Hong Kong, there's a real misconception. Again, this is a very legal relationship that we provide for our clients, where First Digital Trust provides the legal relationship, but the assets itself can be held anywhere in the world.
Yeah, I mean, I've had a fair few bank accounts in my time, but nothing beats the Hong Kong bank account. By default, you have this big list of currencies. It's all integrated, international, and I've never seen that anywhere else in the world. So that is something that we've noticed is pretty unique to Hong Kong. Why don't you share a bit more? So you can obviously start to see now why First Digital was the partner that we wanted to work with when we started building our retirement products in that hybrid world between crypto, digital assets, and traditional markets as well. Why don't you share a bit about your relationship with stablecoins, and particularly TUSD? How did that come about, and what are you doing in the stablecoin space?
And we've been working with Trust Token, TUSD. We're the custodian for all of their currencies: TUSD, THKD, AUD, Canadian, CAD, and as well as TUSD. So we've been working quite well with them as their fiat custodian, one of their fiat custodian. And again, to reiterate the fact that we can hold multi-currencies directly without having to convert to other currencies here, which really gives them the ability to sort of provide that services for their non-US clients or clients that are looking at using the other currencies for whatever purposes that they need to. So when we started working with TUSD, of course, we were both a very young company in the sense that dealing in this crypto space. So it was sort of, we started developing and learning from each other. And we have a very, very good relationship, very good rapport with them. There's an element of course, there's always, you have to have an element of respect And one of the things that they've given us a very good, trust in the sense that to manage the underlying reserves. And of course, it's not easy now with the whole US Treasury and the bonds to maintain those reserves in a positive, profitable way. So we've managed to keep that for them, and to be able to grow the market cap for TUSD.
Excellent. Okay. So switching gears to the investment opportunity, obviously most of the round has been subscribed to. The way it works on Bank to the Future is we did an extended round because this is more of a business to business play. So we anticipated our investors needing to understand a bit more about it because they may not be a direct consumer and have a relationship with First Digital Trust yet. But it looks like that we might end up closing early, or we might end up going into overfunding. So good to see the popularity there. Help investors understand a bit more about the direction that you want to take this company and the opportunity that you're seeing here.
Well, I think that a lot of people that really are bullish on the whole blockchain digital asset industry. I mean, we do not only work with, a lot of our clienteles are not just in the digital asset space. A lot of our new inquiries and new clients are coming to us are from the traditional space, like real estate companies, people that wants to raise capital through holding shares digitally. So we do tokenized securities. We tokenize real estate titles. Now we work on pensions. So there's a lot of traditional companies that are wondering, okay, well, how do I actually get, before I'm left behind in the train, I need to really look at how we can modernize our business. So those are really a lot of multi-global companies and banks as well are looking at us and our legal structure is, okay, well, how do you guys do this? How are you guys able to help your clients and us at the same time? It's not as easy as just being a traditional custodian. When we heard the word custody 2 years ago, there was a lot of misconception of what custody is. It's just to hold something. Well, you can't just really hold something without having to understand the legal responsibility, fiduciary responsibility of holding one's assets. So as a FATCA compliant company, so we report to FATCA in the US, we're also compliant with common reporting standards. People are saying, well, cryptocurrencies, it's not actually a financial asset. Well, it will be. There's a lot of regulators looking at that. And I have already considered cryptocurrency in some countries like Malaysia as a security. In some countries is an actual legal currency. So these are all of the aspects that we look at when it comes to dealing with different clienteles. And where we see us going forward in the future, of course, why we're raising money is to build out the technology side. You can think a trust company is like a turtle. We move very slow. But in your industry, in the whole blockchain crypto industry, everybody is lightning speed, including all the names that's involved in these companies. Everything is related to fast, 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 right? So how do you keep up? The way we keep up is we have to build technology to keep up. We have to build APIs. And as you know, personally dealing with us is that, we're constantly building products that can be right up there with the highest and the most modern tech companies like your Ubers and Alibabas and things like that, but as a trustee. But the infrastructure, the engine that these company needs to grow is essentially what we're doing. What we're building here is to allow these companies to grow, having that ability to do rapid settlements with ledger-to-ledger settlements on their fiat, the ability to do KYC AML instantly through our partnership with the likes of BlockPass and OnFido to really bring the trust business to a new world, which is long overdue because it is a very slow, archaic word when it comes to trust. I mean, even the word legacy trust has the word legacy in there. So we wanted to modernize that and use, like First Digital Trust is a very new, exciting word.
Yeah, absolutely. So I think this is a good stage to bring Famida in, see if we've got any questions from our investors specifically related to this. So Famida, is there any audience questions?
Hello. There's lots of chatter in the live chat, but there aren't specific questions. Oh, just one just popped up. Okay. Andy Jerez has said, what is First Digital Trust's current valuation? What's the potential growth space?
Our current valuation based on the fundraise is at 25 million US dollar. And I believe that's a very conservative valuation. And the growth, of course, how we earn our revenues is from fees. So we earn from setup fees, we earn from asset under administration fees. So if you have $100 million with us, we earn a percentage of that every year. So we also earn on instruction fees. We earn on, so I mean, it's a fee-based business. One of the things that we think that our valuation will definitely continue to grow is that it costs our clients more money to take their assets out of custody than it does to leave it in custody. So we have to maintain our AUA constantly. And we believe that we will grow to over $1 billion in the next, before 2021. I mean, our AUA, our valuation.
So assets under management, or yeah.
We call it under administration. Management is more of a relationship because we don't actually manage. Management of assets in relation to securities are managed by licensed advisors or investment managers. So we just administer the assets, just to be correct on the terms.
Mm-hmm. All right. Sorry, Simon, did you want to expand on that?
Well, I'll ask another question while you pick out one, but
I have actually got one.
Go for it. Yeah.
So Casso has asked, okay, so here's a question for Vincent. Do you see in the future a way to operate business without KYC, just like how Bitcoin used?
Well, I mean, there's some clients that comes to us and say, we're not comfortable. Our clients are not comfortable doing KYC and AML. Well, I said those are the kind of clients you really don't want because they're hiding something. And if we're gonna be an industry that's working with, we want to grow this industry where there's traditional financial clienteles, global 500 companies that wants to work with us. We can't continue to work with non-KYC and non-AML type of clienteles. I understand the whole aspect and essence of being decentralized, which I believe there is definitely ways to be decentralized, but when those assets become other forms of assets, then it's really important that we do these type of proper KYC and AML to be compliant.
Yeah, that's actually interesting because Casso, the person that just asked that question, commented earlier and said they don't really believe that there is actual such thing as decentralized, particularly in ICOs.
Yeah, the ICOs, I think those are the old days, which is really good for our industry to grow in the speed that we are. Now, the trend is really looking at different types of ways to, you heard about decentralized financing, but truly is it really decentralized? But when people actually convert those assets, to real usable assets like real estate, stocks, anything that has use in the traditional world that's recognized by regulators, then it really is becoming a way that we have to bridge that decentralized world with the centralized world. And this is where First Digital comes in. We really try to give our clients those type of structures that they can do that seamlessly without having to feel, the toll of paying heavy taxes. I mean, I'm not encouraging people to not pay their taxes, but there is a case in the Supreme Court in the UK in the past that says that no one person is obligated to pay its full tax, but to have the option to look at the best way that they can reduce their taxes. And that's not breaking the law. You can look at different ways of saving taxes, and you don't have to feel guilty about that. If there's ways that you can reduce your taxes, don't be guilty about that.
Yeah, I think that's quite interesting, Simon. I don't know if you'd agree, but like I thought that the whole point of blockchain was to be decentralized and to steer away from feeling surveilled. And I think that that's what the issue is, that we're coming into such an age where people really do value their privacy and want to have assets and want to invest in their future and their retirement, whatever it is, without having to feel like they are controlled and stifled by the government.
Yeah, so I mean, there's two parts to that, and there's two industries that are growing. One is the industry of doing it the way Bitcoin was designed. I think, Danny, you're in our shoot. Hey, Danny, how you doing? Sorry, we got some work going on. The studio's being built out here as well. So the decentralized way, so I think it's important to have both, actually. So in developing how we're going to do retirement plans, you need to think about tax efficiency, you need to think about inheritance, you need to start thinking about all of these structures that come into play, and also having the self-custody ability to do that. But a lot of people that are self-custodying right now, it doesn't mean you don't have to pay tax. It means you're not paying tax, which is illegal. So if in your country you do need to pay tax, and you think just because you're trading Bitcoin back and forth and they're not going to find it, then that's going to catch up with you at some stage. If there are legal ways of doing that, then yeah, all for it. And the decentralized finance part is if you can transact peer-to-peer and generally is decentralized, then you don't have to introduce all these middle people, and it moves back to law enforcement and you being able to do that. But it doesn't change the law. So you still got to operate within the legal parameters of wherever you are. As Vincent was saying, if you can do this completely legally, then that's how it's got to be. It's very topical at the moment because we've seen exactly what happens when you don't do KYC. And there's a big news story at the moment with BitMEX, and the CTO just got arrested because they weren't doing KYC. And that's a Hong Kong-based exchange. It was doing things in Bitcoin. If you're investing in companies, we as companies don't like doing KYC and asking questions just as much as you don't like providing them. But as CEOs of companies that are operating within the regulated space, we got our neck on the line where you go to prison if you get this wrong. These are laws, and the two industries are providing very important services. But even if you're doing it in a decentralized way, the innovation is in lack of surveillance. But then you don't want to be caught breaking the rule just because you're not being surveyed, breaking the rules there.
But like doing it in a way of you can invest and you can participate in blockchain, the future of finance, but in a more, I don't know, a less surveilled sense, but still feel secure enough to share your KYC is, I don't know.
And that's the innovation. That's why we invested in Blockboss and
and that's where the trust comes in, right?
That's where trust structures come in. So it's getting that balance right between, you can either do this legally and use technology to produce the innovation, or you can just do it non-legally and use technology to evade. And there's consequences of both. And so, BlockPass is giving the ability for people to own their own identity, control who's it's shared with. And that's why, we're both partners with BlockPass and those types of innovations.
Well, the whole trust has evolved tremendously. I mean, everybody knows the word trust related to you're a trust fund child, you're coming into a lot of money. Well, we brought trust to the everyday person. You don't have to have $1 million or two to actually set up a trust. That's the beauty of the digital asset world and blockchain, is that we can set up a trust even if you want to protect $10,000 in your savings. It doesn't mean that $10,000 is not a lot of money, but to that particular individual, 10,000 is his life. And why does he want to protect 10,000? Because he wants to keep 10,000, not keep 5,000 and pay 5,000 away. So trust is in a way that what First Digital wants to do is bring it mainstream to the everyday person, and also dealing with pensions, that we're digitalizing pensions, is that you can be employed by an American company but working in Dubai, not qualified for any pensions there, but we can provide these individual pension plans. I think Bank to the Future, you guys are doing that with us. These pension plans, you don't have to make, $10,000 a month. You can make $1,000 a month and still protect and contribute to a pension that you control. So to me, that's really decentralization, right? It's not putting your pension to something and losing control of your pension by somebody just investing it randomly and losing it. So having to be able to control your pension by contributing 10%, 5% at your choice into a plan, and then deciding how that money is invested and still protecting it, I think that to me is really where the essence of decentralization lies.
Yeah, and this is what the rich do. This is essentially the structures that the wealthy use, and they do it legally, because if you're very wealthy, you are a target. But why not bring that very same structure to everybody? Because now everybody can use the same structures, and that brings everything on a level playing field. But if you want to do things illegally, then obviously you're not going to be working. That's not. There's no sustainability in any company supporting that activity, because the punishments are harsh, and we've seen that.
Well, I looked at this whole pension side for what we call the low earning employees, global employees and non-employees, is that why does only the high earning employees around the world deserving pensions? Because their employer says so. So in Hong Kong, there's over 400,000 domestic helpers here that are not subject to getting any pensions from their employers. So we created something that they can set up their own pensions without having their employers doing it, giving that fair
Yeah,
treatment.
that's awesome. Yeah.
And it's not only domestic helpers. So you have, restaurants, you have entertainment business, they're traveling, they're global, and they don't get their voluntary or non-voluntary pensions because they're not in their country, they're outside of their countries. So what we've created under Bit Pension is something that they can just say, hey, look, I can contribute to this pension and still be protected like any other pension that the government is giving me. And then I can actually control how that money is invested. So these are things that I think that is revolutionary, and what we've created, and to be able to bridge the traditional and the new world through blockchain and through, it might not even be blockchain related, but it's still technology. It still have to do with how do you do mass KYC on 1 million people? We can't do that manually. So the relationship between us and the likes of BlockPass and working with Bank to the Future and companies that can really scale up and making sure that all of these products are successfully put out there so that these clients are getting their fair share and to be treated right and to have transparency. I mean, the key is to have transparency, not to hide assets, to say, hey, look, you know, here's your pension, but I can't tell you where it's invested. Well, so this is the beauty of working with crypto and blockchain digital asset is now, for example, people can purchase tiny bits of gold through tokens they can hold in their pension. People can hold Bitcoin in their pension if they wish to. They can hold Ethereum. They could hold anything to do with the 1,100 types of cryptocurrency we can hold in our wallet. We can place that in their pension.
Yep. Okay. If there's no more audience questions, I think we're probably ready to close this up. Is there any more questions from the investors? I'm sure when we post this on the Investor Zone, it will lead to more conversation.
Yeah. Actually, there is questions that Aman has written, which are actually very relevant. So, so just to understand clearly, so if someone was to go to Bank to the Future website and now have a look at if they qualify to invest, and if they do invest, is there any annual returns like dividends or any sort of interest that they should look forward to?
No, so if you're looking to invest in income, this is not the right type of product. This is a high growth investment product, which means that you're doing what the venture capital industry do. And the venture capital industry look to purchase a company, and if the company succeeds, then hopefully it will be worth many times more in the future. And you're looking to invest for capital growth, so that if First Digital gets acquired in the future, floats on a stock market in the future, or even gets to the next funding round and qualifies on our secondary market, then the share price, if the company is growing, should be, this is high risk, high return investing. If you're looking for income, then this is not the type of investments you're looking to be made. And while dividends do happen, if companies succeed, we have companies that become big cash cows, mainly from the exchanges. Most professional or investors that invest in this industry, they wouldn't want a dividend to be paid out because they'd want all that money to be reinvested in the growth of the company, so that you can try and get the share price a lot higher. And it's a long-term investment. It's not an income-generating investment, investing in a company like this.
So for anyone that's new, this is a convertible note investment, right? So what's the difference between equity and convertible note?
So a convertible note is a product that's created. It was created really by Silicon Valley, which is the center for investing in deals like this. And it's a product that means when a company is earlier stage. So while First Digital Trust is a spin-off of Legacy Trust, it is also dipping its toe in this industry, and it's hard to value a company that may have a few strategic partners, but is forecasting to have many more in the future and grow a lot in the future. So what Silicon Valley did is essentially they created this convertible note whereby you are investing and you're delaying valuing the company. You put a valuation cap on that company, so there's a maximum valuation. You normally get a discount as well, but essentially it's a loan to the company that converts to equity. And the goal is that later they get to a funding round at a higher valuation. And those investors that invested in this are capped at that valuation. On the pitch, if you click the convertible note link, there's a whole FAQ with all the different questions on how a convertible note. Most people are familiar with shares, but convertible note is a very common way by professional investors investing into a deal like this that is a bit hard to value at the earlier stage.
Cool. And finally, what will the funding be used for?
That's one for Vincent.
Well, the funding is used for building our technology out, hiring proper tech industry experts to come in. Of course, there's also the compliance side. There's not many people in this industry from the traditional legal compliance that understands the whole crypto blockchain world. So the gap is, the choices out there are very limited, and in demand. But essentially, we're building out the whole tech system to be able to cater to all of the clienteles that are looking for, like API systems, and of course, growing. To be a tech company, as you know, it's not 10 or 20 people. You need quite a number of people to answer client services. So it's a 24-hour type of services that we need to provide. So human resources and technology.
Cool. That's it from me, guys.
Okay, great. Well, I think that's going to do it for episode 73 of Bank to the Future Live. Vincent, thank you very much for joining us. I think it's quite hard for investors that may not actually be users of the product at this stage, but I think we achieved the goal of helping people understand a bit more about what the company's looking to do and some of the partnerships with Bank to the Future and the True USD team as well, the True Token team. On the stablecoin side. And I think that it's very exciting to see the potential of having like these backbone structures that the ultra wealthy people use and being able to use that technology so that it can be brought out to a much wider audience. And I think that's a very noble thing that we would like to actually support and be a part of. And I'm happy to be a partner and see where this all can go. But obviously, as always, with Bank to the Future, this is high risk, high return investing. It's about diversification and being a part and making a really strategic bet on what you think the future of finance looks like. And this is a piece of that. So for me, thanks for bringing out those questions. And that's going to do it for this episode of Bank to the Future Live. Thanks, everybody.
Thank you very much.
Bye.